So I receive a lot of questions about dividend investing, and I am going to answer 3 of them today. These are 3 questions that subscribers, we are almost 20,000 dividend growth subscribers strong, amazing community here. These are 3 questions that you guys have just asked me recently about dividend investing, and so I'm going to jump into those questions in today's video. So I want to jump right into these amazing questions about dividend growth investing. The first one goes like this. Ian, why do you not invest in ETFs? Dividend ETFs. ETFs, exchange traded funds that track dividend stocks. In fact, Ian, there are ETFs out there that even track the dividend aristocrats, those dividend stocks that have the longest track record of raising their dividends over time. Why don't you just keep it simple? Ian, I know you own all these 39 stocks, you manage them all separately. It sounds like a lot of work. Why don't you just go for the simple exchange traded fund? Now, I answered this question a long time ago. I'll link in the description below. I did an entire video on this topic, but I want to highlight some thoughts today because I get this question all the time, and it is so fundamental to what I am doing here on PPC Ian, and I want to make sure that everyone in the community is aware of my rationale. Now, I am not saying that ETFs are bad. I am not saying that ETFs may not make sense for others. They just do not make sense for me, and here is why. First and foremost, fees. I just do not want to pay fees to a mutual fund company, to an ETF company. These ETFs come with fees. I just do not want to pay fees. Second, I don't like the lack of control. Over time, these ETFs can change. The positions can change. The allocation per position could change. I just don't have that direct ownership. I just don't have that direct control. I like to have direct control over my investments. I like to micromanage my investments. I am building a world-class portfolio that I am going to hold forever. I want to have total control over it. What if the ETF company, say 5-10 years from now, changes? What if they go out of business, or what if they sell their business? What if the ETF morphs into something else? I just can't take that risk. I absolutely cannot do it. Even if it's 20 years from now, what if the ETF company completely changes? What if the rules around ETFs change and the ETFs completely change into a different vehicle? I just don't want to take that risk. I know 20 years from now that when I buy a share of Johnson & Johnson, it's going to still be Johnson & Johnson in 20 years, and I'm still going to have that direct ownership, that direct control over my investments. So that's reason 2. Reason 3 is actually my favorite reason why I dislike ETFs. I just completely, if I went the ETF route, would forego my ability to bargain shop, to value shop. One of my favorite aspects of dividend investing is sitting around, waiting, and seeing which stocks in my portfolio go on sale, which ones become deep values. And when they become deep values, I like to buy them. I like to cherry pick those stocks. I like to pick those specific stocks that go on sale. Now, if I am buying an ETF and I just have a basket of stocks, there's no way to do that cherry picking. I'm just buying the whole basket. And my experience has shown me that at any given time, I own 39 stocks, by the way. Some of them will be overvalued, some of them will be fairly valued, some of them will be undervalued. And if I'm just buying a basket, if I have to buy all of them at once, I'm just buying the average. And the problem with that is it does not allow me to do my deep value bargain shopping. I don't want to just buy the basket all at once. I want to go after my 39 stocks. And there are times when I add to my stocks that are fairly valued. You guys know this if you've been watching my channel for a while. But you also know that I like to bargain shop. I like to find value. And so what's great about owning individual stocks is I can be, okay, this one's on sale right now. I'm going to buy that one. But you know what? These other ones, they're not on sale right now. I'm going to wait until they are on sale to buy more shares. But again, if I'm an ETF investor, if I'm an ETF shopper, I better just buy the whole index. I'm just buying the average. I'm never going to get the same value, the same pricing opportunity that I would have buying individual stocks. And quite frankly, that is a total deal breaker for me. Maybe I could live with the fees, maybe I could live with the lack of control, but this basket effect, the effect of not being able to cherry pick deep value for me is a total reason I cannot stand for myself ETFs or mutual funds or any vehicle of that sort. Now, for others out there, it may totally make sense, and so I'm not trying to completely put it down. I'm just sharing my own experience here and why ETFs don't work for my core dividend stock portfolio. Last one is just staying in the game. This one is a little bit more superfluous. This may not be, the most tangible point, but I like to stay in the game, and what this means is I need to stay focused on what I'm doing. I need to keep putting money in the market each month. I need to stay excited about what I'm doing. I need to feel the progress. And for me, just owning individual stocks, it's really cool, it's really exciting, it's a lot of fun. There's a pride that I get when I buy individual stocks. But for me, if I were to buy an ETF, I don't think it would be the same thrill. I don't think it would be the same excitement. I don't think I'd have the same pride that it's like, oh my goodness, I actually own a good amount of money, a good chunk of this company. I wouldn't have that pride that I'm owning these companies, that I'm a shareholder, because it would be through a middleman, it would be through the ETF. And for me, dividend investing, the day when all of my dividends pay for all of my living expenses, that is in the future. It's going to take some time to get there because I have a very high amount of expenses that I need to cover living in the San Francisco Bay Area, having a family with 2 kids. And so anyways, I need to stay in the game. I need to keep going. I need to be excited about this. I need this to be fun for me. And for me, just investing in an ETF, that is not does not sound like fun. It's not something that would be compelling enough for me to get excited about each morning. And the problem with that then is if I have money, I would be most likely to invest it. I might squander it. It might go elsewhere. Whereas staying in the game, buying individual stocks, boy, I can't get enough of it. I love it. And so it keeps me in the game. It keeps me focused, keeps me going towards my goal. So amazing question. Again, if you invest in ETFs, and I know there's members of the community that do ETFs and individual stocks, there are different strategies that work for different people. I commend people who enjoy the ETFs, and I think ETFs are good for investors in particular who may have never made it to the stock market. There's this whole class of people out there who have an affinity against the stock market. They would have never made it into the stock market if it were not for ETFs or other in recent last 10, 20 years types of inventions like index funds. If it were not for these newer financial vehicles, perhaps a lot of investors out there, they would have never made it into the stock market. And I think these vehicles are great for getting people from saving, not investing money, to investing money. But for me, I'm at a different level in my journey. I really, really need those individual stocks to accomplish what I'm trying to accomplish out there. I am building a massive dividend stock portfolio, and I want it to pay all of my bills, and I want to cherry pick value, and I just want to be excited about it. And I do not want to be paying fees to mutual fund companies, to ETF companies. And so, great question. Thank you so much for that question. I get it all the time. And again, I'll link in the description below. I did a whole video on this a long time ago, and there may be some nuggets of information in that video that I'm not covering today. Moving on, question 2. I love this. It is actually not really a question. It's more of a statement that a recent subscriber or a subscriber recently made. I love it. I've been doing a lot of videos about Johnson & Johnson, my #1 favorite dividend stock of all time, and this was in response to that. Now, my last video, and I'll link in the description below, it was about some mistakes that I think dividend investors are making when they are just looking at GAAP earnings. They're looking at GAAP earnings. They're not looking at adjusted earnings. I think it's important to look at both. And I explained that through the example of Johnson & Johnson. Again, I'll link in the description below. I want to share what I think is an even bigger mistake that some dividend investors may be making. And again, I am not trying to make an example of this subscriber. Look, maybe everyone has different ways of looking at it. I just want to share my personal opinion here. But I love this comment that this subscriber made because I personally think that looking at things this way could be problematic, but I think all of us are biased this way, myself included, and that's why I'm going to highlight this today. So let me get my laptop. So the comment from the subscriber, it goes like this, and this comment again is in reference to Johnson & Johnson. I think it is only slightly overvalued according to its historic growth and average PE. Having said that, I worked for them in their UK and later Switzerland headquarters a long time ago, and I can honestly say it was a terrible experience. They care zero about the quality of their products. Some meetings were almost grotesque. I would not be surprised if other big scandals will come out in the future. Toxic stock as far as I am concerned due to poor company culture. All right, everyone, the topic of this question, again, this was a comment that was made, but I'm sharing it as a question because this is so important, because I get questions all the time about company culture, comments about company culture. I think investing based on company culture is a bigger mistake than my last video, which is a big mistake about only looking at GAAP earnings, not looking at adjusted. If one is out there investing in the stock market, investing in dividend stocks, and is basing decisions too heavily on company culture or perception of company culture, in my opinion, that is a terrible mistake. It is a mistake that could take a potential investor away from good opportunities. And so there are a few things I want to point out here. First and foremost, I love this subscriber. Thank you for this comment. Thank you for sharing your opinion. The thing I want to point out, though, is Johnson & Johnson, 134,000 employees worldwide. This person who wrote the comment sounds like they've worked in a few of their offices. Even if those offices did have poor cultures, let's say they just had a bad culture, maybe they weren't very productive, maybe people were wasting time there. Who knows what? Bad culture can mean a lot of things. It can also mean people are being worked too hard, or the manager doesn't really care about the employees, people aren't getting the promotions that they think they deserve, or that they do deserve. There's a lot of things that can go into a bad culture. I don't want to cover them all here, but let's just take it at face value. Let's say these offices did have a poor culture. It's possible. Okay, out of a context of a company that has 134,000 employees, even if these offices, they shut down and they were just a complete waste. In the scheme of things, in my personal opinion, that is just a drop in the bucket in terms of the overall company. And so the challenge here, and I know this because I have studied management a lot, I've managed a lot of people over my years in corporate America, and one of the things I learned early on is to the employee, the company is their manager. So the interaction between an employee and their manager, if it's good or bad, it will shape that employee's worldview of the entire company. And so the challenge here is if I work at a company, I have a bad manager, or maybe I'm in an office just where the culture is bad, it shapes my worldview of the entire company. But the fact of the matter is this company is a lot bigger than that one office. Maybe that one office did have a poor culture, but the overall company, 134,000 employees, is a lot different than that one office. So I want to point that out. Another thing I want to point out is the whole reason we are here right now on YouTube talking about dividend investing. This is the why. This is why I do it. I have worked at so many companies over the years, and I know a lot of people have worked at all kinds of companies, corporate offices, high-powered jobs, high-paid jobs, all kinds of jobs. There is oftentimes challenges when one goes to work. Oftentimes it is not all fun and games. Oftentimes there are poor managers, there are poor cultures, it is difficult to get promoted. This is why we do it, guys. People, this is why we do it. This is why we invest in dividends. We invest in dividends because the dividends, the ownership in these companies pays us money when we sleep. The dividends, they pay us so that we don't have to go into the office and experience the poor culture. The dividends pay us so that we do not have to stay up late at night until 3 a.m. every night of the week, like I did in one of the jobs that I used to have, doing a 200-page or 200-slide PowerPoint presentation explaining to the senior team why my team should still have jobs at the company. This is why I invest in dividends. And so I love this type of comment because it has so many dimensions to it. And I think first dimension is just the easy one. Don't let one's experience cloud investment decisions too much, because culture in one manager or one office, it may seem like the whole company is bad, but oftentimes it is not. But also the other dimension that I want to point out here again is this is the why. This is why I love dividend investing so much, because it is always a good culture when I am sitting back, chilling, wherever I want to be, doing whatever I want to do, having the dividend checks roll in. This is the magic of dividend growth investing. And I'll tell you something else. A wise man, this is a family member, a wise man once told me, Ian, and he's told this to other people, work is a four-letter word. It is true. W-O-R-K, 4 letters. But in the greater scheme of that, we all know what 4-letter words are. And look, work is not easy. Work is hard. There are so many poor cultures out there. One of the most difficult experiences in my entire corporate career. Look, I was valedictorian of my high school. I went to Stanford University. I have a degree in computer science from Stanford University, one of the most difficult degrees to obtain out there, minor in economics as well. I have all of these accomplishments, yet one day my ego was crushed. I worked at a company, I got laid off. It was one of the worst experiences of my life. I believe that the culture was poor. It was a tough culture. And I'll link in the description below to the video I did about my experience getting laid off. But man, culture, it's tough out there. Work, it's a 4-letter word. Work at any of these companies, including the ones that I invest in, it is tough. That is why I like investing in these companies, because I don't want to have to go out there and do the work that others are doing for me. I want to invest in the companies so I can enjoy the byproduct of what these companies are doing and receive my dividends. Now, obviously, I don't want to paint all doom and gloom out there. I'm in a position now at my current gig that I love, and I have had jobs out there that I love. And even within one job, look, there are times when it's difficult. There are times when it is good. It goes up and down. There's ups and downs. And so I don't want to paint a negative picture that all cultures are always bad, but I just also want to be realistic that, look, work is work and work is tough. And I love it that the tough work is being done, but I can invest in a company like J&J where maybe the culture is tricky sometimes. Maybe these people that are working in the UK office, maybe they are being pushed way too hard. Man, I am thankful that I have the opportunity to invest in these people who are working so hard that I can sleep sound at night and receive my dividend checks. And so I'm thankful for that opportunity to invest in those people. But anyways, multi-dimensional comment that was made. I love it. I am so thankful for this comment. And a lot of thoughts that I have on culture. But in general, if I hear that a company has a poor culture, even if I experience a poor culture, it is not going to be... Now, obviously, there are exception cases, but in general, that is not going to be a criteria in my personal investment philosophy, just because I know in general that work is oftentimes difficult. Now, obviously, there are corner cases where if something extreme happens or something just wrong or values driven, poor morals, that kind of stuff, if I see that out there, obviously that would totally factor into to investment decisions. So love that question. Now, the third question today is just, I want to close out on a fun note. So you guys know that I love to invest in individual stocks, not ETFs. One of the reasons that I like individual stocks too is I can just get behind companies that I care about, companies that I believe in. And so one of my favorite companies of all time, Procter Gamble, makes this Tide laundry detergent. And so subscriber recently asked me, Ian, which laundry detergent do you use? I know you use all these products, and I've highlighted a bunch of products here on my channel. I love doing that because I love to enjoy the products that I invest in firsthand. And so this is actually how we do our laundry in our house. I do laundry myself, my wife does as well. We all partake in the laundry process. And Tide, the Free and Gentle, is the good one. Free and Gentle is the one I enjoy because it doesn't have the perfumes or dyes in it. It is just free and gentle, as the name implies. I've been using this detergent forever, and it allows me to use the very products that one of my favorite companies of all time, Procter Gamble, one of the companies that I invested good money into, a lot of money, built my position in 2018, last year. That was one of my core focuses for the year, and so I love this company. Now, as far as the laundry process goes, there's some other products that we use as well. So what I have here is Bounce. These are these little dryer sheets. This one, again, is the Bounce that's free and gentle. It doesn't have any perfumes. I enjoy placing these in the dryer when I dry my clothes because it removes that, well, one, it's supposed to soften the fabric, but also it removes that static cling that sometimes comes, or that, that static. I don't like that static, and so I always use a Bounce. Again, what you may not realize, it's so many household brands. They are made by these very dividend companies that I invest in. So this is another Procter & Gamble brand. And what would be today's discussion without mentioning one of my other favorite stocks of all time, Clorox. And so this is a product by Clorox called the Stain Remover and Color Booster. We don't use this all the time, but when a clothing item does have a stain, putting some of this directly on the stain before placing it into the wash works wonders. And so I love this product as well. And so I'm able to support two of my favorite companies while washing our own clothes at home, saving money. No, we don't send it out. Certainly there's some dry cleaning from time to time and very fancy items that get sent out to the dry cleaners. But most of our clothes, we are washing at home. We are saving money. We're doing it ourselves. And we're doing it thanks to Procter & Gamble and Clorox. And this would not be thug life here on PPC Ian if I were not walking around in fresh and clean clothes all the time, thanks to Procter & Gamble and Clorox. All right, everyone. So thank you for those amazing questions, amazing community here on PPC Ian. Hey, we're going to have our second meetup real soon in January. I have sent an email out to the local Bay Area crew. We've got a good number of people on that Bay Area crew email list, and so the responses are starting to come in. I floated a few dates by everyone that would work for the meetup, and I am tallying up all of the preferred dates and times, and we're going to pick a date and time for the second ever PPC Ian meetup. This is going to be at the Starbucks Reserve in San Francisco yet again. Got to support Starbucks. I love Starbucks. Personal holding of mine, top 15 favorite stock of all time. Love Starbucks, and it actually has become many times my home away from home as I go there to get work done all the time. I love Starbucks. So check it out, by the way. If you're not on the Bay Area crew, you want to be on, I'll link in the description below. You can join that email list and be informed of local activities, local meetups here in the greater San Francisco Bay Area. I just want to thank all of you for the comments, likes, subscriptions. It all means the world to me. It's the greatest way you can thank me. We have a thriving community here, and I love all of the questions, all of the viewpoints. Look, there's people out there investing in ETFs that do not do individual stocks. I love you guys. I respect you guys. These people, some of them may think I'm wrong. They think I'm crazy doing individual stocks. Hey, I respect your opinion, just as I know you respect mine. Also on the culture stuff, I know there's people out there investing on culture. Look, I respect you guys. I love you guys. I do things a little bit differently, but I love the discussion and the debate here. That's what it's all about. We all have our own way of doing things, and that's what makes it fun. I wish all of you such an amazing 2019, a productive 2019, an exciting one, happy, healthy one, and one full of success investing for dividends and cash flow. So before we leave today, just a full disclosure, I own the stocks mentioned today. I am long. I own Starbucks, ticker symbol SBUX, Johnson & Johnson, ticker symbol JNJ, Procter & Gamble, ticker symbol PG, Clorox, ticker symbol CLX, and 3M, ticker symbol MMM. I own those stocks in my personal stock portfolio. Also, before we leave today, today's video is not investment advice. I am not a licensed investment advisor. Today's video is just for fun and entertainment. Literally just sharing my personal journey here on YouTube for fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. All right, everyone. I will see you in the next dividend investing video.